And for anybody who wasn't here in the last one, my bio, I was a not-for-profit CFO for a really long time. Most of my time was in healthcare. I worked for a big hospital in Houston, and then I came to San Antonio and worked for the Cancer Therapy and Research Center, and then for Texas Biomedical Research Institute. I left Texas Biomed and went to work for a little consulting firm called Aventine Hill, and I was fortunate enough to work for a lot of different not-for-profits while I was doing that, and some for-profits too. So I retired from Aventine Hill about 5 years ago, and now I mostly just do volunteer stuff. And this is one of the volunteer activities I really enjoy. So thank you for letting me do it. So this presentation can be super technical, but I'm going to try not to have it be super technical. I'm going to gear it at people who are on the boards of organizations and pointing out the kinds of things that you as a board member should probably be looking at on a Form 990. Yeah, it's fine to go ahead, Becky, to the next slide. There are several different kinds of Form 990s. If your organization is really small, there's a Form 990 EZ, and that's if the organization has revenues of less than $200,000 and if they have assets less than $500,000. Then there's even smaller organizations, and that's just a postcard literally that you mail in, and that's if your revenues are less than $50,000. There's also a separate Form 990 if you're a private foundation. So Ingrid, you maybe have seen that, I don't know. And but it is important that you file your Form 990, because if you don't, after 3 years, the IRS will cancel your 501c3 status. So you have to file something, even if it's just one of those postcards or easy forms. But for today's presentation, we're going to talk about the big complete Form 990. Doesn't have any alphabet letters after it, and that's where we'll begin. Becky? Just a little history about the Form 990. It's been around for a long time. We're going on 60 years, 70 years, 80 years here pretty soon. It is required to be filed 4.5 months after the end of your fiscal year. You do have to file electronically, except for that little postcard one. You can get 1 6-month extension. It's no questions asked. Just about everybody I know goes ahead and gets the extension because it lets you not have pressure on your auditors to get your audited financials done in that 4.5 months, plus get your Form 990 filed. One of the confusing things about Form 990s, and funders actually struggle with this, is that the year on your Form 990 will be the start of your fiscal year, not the end of your fiscal year. We're going to look at the Form 990 for the Utah people in just a second. You can see that. However, it's confusing because on the Form 990, if your fiscal year is not the same as the calendar year, sometimes you're going to use calendar year data and sometimes you're going to use fiscal year data. And particularly where this comes into play is on salaries. You're going to have to actually give them both. Vendor payments, you're going to give them both. And donations, you're going to give them both. So you're going to have your records in 2 different ways to complete the Form 990. Becky, next. These are a couple years old, but not-for-profits got in the news negatively over the course of the last several years. And here's some of the headlines of negative press that not-for-profits got. Wounded Warrior being really one that's an active organization in San Antonio with all our military personnel, and they were one of the worst about their executives doing lavish spending and having management retreats at expensive places. So what happened after all this bad stuff came out in the news was that the IRS decided that they needed to tighten up on what the Form 990 asked. So you want to move ahead, Becky? Next. Okay, so in 2006, they greatly revised the Form 990. The main part of the form went from 9 pages to 12 pages. And then you'll see as we go through this that there are a lot of schedules. There used to just be A and B, and now there are schedules through O. So that's a lot. They also asked questions that weren't there before that you as a board member should pay attention to. And we'll go over those in more detail, but they relate to corporate governance, the board itself, and what the organization's policies are. I went to a seminar in Baltimore many years ago. I was probably 10, 12 years ago. And they had the guy who was from the IRS and was head of their not-for-profit compliance division come and talk about the revisions to the Form 990. And the first year that they sent out the revised Form 990, he said they expected massive non-compliance, that people would just basically say, it's too hard, it's none of your business, we're not telling you. Because there really isn't any, or especially back then, there really wasn't any audits or oversights on the Form 990. Nobody was really going through and saying, you didn't fill it out, this information doesn't match your audit. There really wasn't any check or balance from the IRS side about people doing it correctly. So he was pleased that organizations do take it seriously. And you fast forward to where we are today, and most not-for-profits, especially on the policy section, believe that those policies are required by the IRS. They're not. The IRS was really smart. They figured it would be difficult for them to get either regulations or legislation on not-for-profits passed, but by just putting all this stuff in the Form 990 and telling everybody to do it, they made huge strides in getting not-for-profits to clean up their game and put in place some best practices. Next. So there are some enforcement things. I mentioned if you don't turn them in for 3 years in a row, you'll lose your not-for-profit status. And the IRS is now, in the last couple of years, starting to audit Form 990s, not so much for the little organizations, but for hospital corporations, the large not-for-profit hospitals, particularly the religious ones. So there is some IRS enforcement going into place. Next. The other enforcement that also just sort of happened to come along is that there are a couple of organizations, Charity Navigator, who's here you see here, and another one called GuideStar. GuideStar is the place if you want to go and get somebody's 990 for free. You just set up a GuideStar account and search for it. They want you to buy it, but if you look around and click on the right things, you can find how to get anybody's 990 for free. Charity Navigator took it one step further than just posting the Form 990s. They actually look at the Form 990s and have gone through and rated organizations. And here you can see the rating for the Habitat for Humanity. And the summary is the overall scores. They got 4 stars. They're rating people on a score of 1 to 100, and you can see that their scores are very high here. If you go to the next page, Becky, you can see the detail behind what's in each of those scores. So on the financial performance metric, they're looking at program expenses. We talked about this last time on the financials, and we'll talk about it again when we get to that page, but Charity Navigator computes the ratio of program expenses to total expenses, and they also compute that same ratio of administrative expenses and fundraising expenses. And those things, pretty much there's an unspoken rule in the not-for-profit community that your program expenses need to be at least 80% of your total expenses, or you are not viewed as a not-for-profit that's effectively using your resources. Some organizations say, oh no, it's only 70, but I can tell you. Ingrid, what do you see? I mean, what do you look at when you look at people's ratio of program expenses?
Well, that's not something that I'm involved in, but I have heard that as being the standard, yes.
Yeah. So fundraising efficiency is sort of the flip side of that. So what they're saying here is that for every dollar that they raise, they're only spending 9 cents. There are also a couple of other ratios and things that they compute here that are sort of standard financial ratios. I'm not going to go through them here, but if you go to their website and click on it, they'll tell you how they compute them. So let's go to the next slide, Becky, and it'll show the other information. So they go through those sections that I told you they added about board governance and policies, and click off whether or not who's on your board, whether they're independent, and they look at your audit to make sure that your audit opinion is clean, that you had an audit by an independent accountant. And here these are the key things that they think you need to have, and that's what they use to evaluate whether or not to give you an administrative 100%. So next slide. So, and donors look at this. They do look at it. So you should be concerned about it too. Then one of the other things they look at is what information is on your organization's website. Donors want to know what your privacy policy is. Are you selling your donor list to other organizations? They want to know, are your board members listed on your website? Are your audited financials posted there? Is your Form 990 there? And is your key staff there? They view all those things as measures of transparency for your organization, and they want you to make that easily available to the general public. Next. All right, so we're going to move to the Form 990 itself. I went through the Form 990 and highlighted in yellow the parts that we're going to talk the most about. The documents that Becky sent you is pretty much this whole Form 990. So if you want to see the whole Form 990, then you should open that document, but you don't really need to for this presentation. So I mentioned on the very first page, I mentioned that one of the confusing parts is the year of the Form 990. So you can see in the upper right-hand corner there, it says that this is the Form 990 for 2013. But if you look in the highlighted line, you can see that it says it's for the tax year beginning on July 1st, 2013 and ending on June 30th, 2014. So your organization is going to consider this as the information from fiscal year 14, but the IRS is going to consider this as your 13 return. Oh, excuse me, it just telling me my battery's running low and I need to plug in my laptop. Excuse me one sec.
Anybody have a good song?
We'll let you start, Ed.
We're all in trouble.
Sorry about that. All right. So there are some funders, including the city. We're going to go back to that page. There's some funders, including the city, who will tell you they need your 2014 Form 990, but that fiscal year is probably not even going to be finished for you. So you have to explain to them how this works. It is confusing. It's real confusing. So then let's look down on the lower left part of the page, and that's where you can see that this is where you tell them what kind of an organization you are. And I would think most of you are going to check the box that's checked there, the 501c3, and then tell them what kind of organization you are. I worked for several trusts, and so you would check the trust box. If you were a trust, I would think most of you are going to be corporations. So, okay, next. So the bottom, so the middle part of the first page, they ask you what it is you do. What is your organization's mission? And it's helpful if you have a succinct mission statement like this. 10 words or less. What do you guys do? So then they ask you a little bit about your organization and the structure. They ask you how many voting members you have on your board and how many are independent. That's an important distinction. And they'll ask you more questions about this later in the document. But if you have board members who are related to each other, they're not independent. I did some work for a small organization where there were 3 board members and they were either brother, sister, or husband and wife. So they had no independent voting members on their board. So when you do your annual conflict of interest statement, it's very important for you to ask who's related to whom, so that you can tell if they're independent or not. Next, they ask about how many people you employed. That's not how many you have at the end of the year. That's how many people you issued W-2s to. And then they ask you how many volunteers you had and if you had any unrelated business income. And you're probably thinking, what's unrelated business income? Well, when I worked for Texas Biomed, they had a lot of land and Clear Channel had a billboard on our land. And so we got revenue from the billboard, which of course had nothing to do with the mission of our organization. So that's an example of unrelated business income. Next. And so then the bottom of page 1 is just a synopsis. Correct, it is, so Arlene is asking the question is about, is it's W-2, not 1099. Yes, later in the Form 990, they are going to ask about 1099s, but those are contractors. This is specifically asking about employees, whoever you issue a W-2 to. But we'll see that other question in more detail. Good clarification. So here is just the summary of the financial statements, summary of your revenue, summary of your major expenses, and then whether or not you made or lost money. They still call it revenue less expenses here, not changing net assets. And then they also ask you on your balance sheet, what's your total assets, your total liabilities, and what your fund balance is. Okay, next. So page 2 asks for more detail about your mission. So it asks you to reiterate again that same mission statement that you had on page 1, and it asks you if you made any changes during the year on the services you provided or how you conducted it. And then down under section 4, you are giving them some specific details when you have more than one program. So Habitat for Humanity really has 2 major programs. They build houses for low-income people, and then they also have the stores that they call Restore, where they sell surplus building supplies. So those are their 2 program components, and that they're down at the bottom under that 4A and 4B. And they also want to know for each of those what your total expenses were and what your total revenues were under each of those 2. So if you want to move the cursor, Becky, move it all the way to the bottom to 4A and 4B. Yeah, there you go. Right. So, so that's where you're showing the total expenses and the total revenue for each of those 2 program components. Okay, good. Next, please. So I'm not going to go over page 3 and 4. Pretty much page 3 and 4 are where you go through and answer questions about the things you do. And depending on how you answer that, it will tell you you have to fill out schedules A through O. And so you'll just answer them and then it'll let you know which of those schedules you have to fill out. I should say, since you have to file electronically, there are some really good inexpensive software programs out there. I've always used one called eFile Form 990, and I think it's $100 to use it for the year. And it does all that stuff. It brings forward whatever you had from the prior year, so it makes it a lot faster to complete it. And it also pops up those forms those schedules that you'll need to fill out depending on how you answer the questions on pages 3 and 4. So Arlene, this is when you go to page 5, which is part 5 in the Form 990, it asks you about what your other IRS filings are. And so this is where it will ask you, did you issue any 1099s to independent contractors? And if so, how many? It asks you again how many W-2s there are, and it asks you how many contribution acknowledgements to donors you sent out. They're trying to just make sure that you're telling the same story to every group at the IRS, because that's one way for them to know if you really have accurate information here, is you also filed all those other documents, so they can cross-check on you. Okay, next. All right, so here's the page, this page 6 that you as a board member should really care about, because this is the heart of the matter. So here again, it asks you how many voting members you have and how many are independent. And you can see there, right, the top question, 1A, and it asks you to explain stuff in Schedule O. And as you go through this whole document, it's going to ask you to explain lots of stuff on Schedule O. So just make sure you keep all your little notes as you're going through this, and then go to Schedule O and type in all the stuff they want you to type as an explanation, which is also really helpful, because when I'm doing work for a not-for-profit, or when I've gone on job interviews, I've gotten their Form 990s and looked at all these things and looked at what those explanations are. So they're really helpful to have good explanations on Schedule O. So here we are. So then looking, they're making sure that you know the meaning of independent directors. They're asking you if anybody has a family relationship or a business relationship. Then under section 3, they want to know whether you've outsourced the management of your organization. Number 4, they're looking to see if you've modified your board or your articles of incorporation. They also want to know if you have members or stockholders. So you're probably thinking, how could a not-for-profit have a member? Well, I was on the board of Girl Scouts for a long time, and Girl Scouts has lots of members. And so that's what they're talking about. It's a membership organization. So quite a few not-for-profits are actually membership organizations. Then question 8 is an important one. They're asking you if you document what happens in your board meetings. So it's very important that you keep minutes, that you have board meetings, and that you keep minutes of the board meetings. That said, I've been advised by many legal counsels that you want your minutes to be as brief as possible. It's fine to say the budget was presented and it has revenues of this, expenses of this, and a bottom line of this. Then just write, a hearty discussion ensued and questions were answered. You don't have to list all the things that got talked about. If there's an action item, if the board asked the management of the organization to go back and make budget changes, then I would document any action that came out of the discussion, but keep your minutes brief. If you're ever in a lawsuit, your minutes are going to get subpoenaed, and you want them to be as brief as possible. So I also encourage you to have minutes taken in the key committee meetings, probably finance committee, executive committee, whatever committees your organization has. Next, please. Here's some more just about your organization. Number 11A is an important one. They want to know, did whoever complete the Form 990 give it to all the members of the board before they filed it? There are lots of information about board members on this form, and it's only fair to your board members for them to see it before you file it. So I strongly encourage you. You don't have to hold a meeting about it. I usually just send it out and say, please review this. If you have any questions, please contact me. Here is where they ask you about all your policies. So the key policies that the organization, that the IRS wants to know about your organization, first and foremost is, do you have a conflict of interest policy? And this is for your board and for your senior management. And every year you should be asking those people to disclose any potential or real conflicts of interest. So when we had the managing partner of one of the large law firms here in town on our board, and we used that law firm, he had to recuse himself from any decisions that were made regarding hiring that law firm to do work. So that's where there was a potential conflict of interest, and you put a policy in place so that you don't have an actual conflict of interest. So that's, do you have the policy? Are you making everybody disclose annually if they had any potential conflicts of interest? The next one on line 13, do you have a whistleblower policy? And the whistleblower policy should include a way where someone can make that known or concern available to the appropriate person. We outsource that. You can do it pretty inexpensively. There are companies that will set up both websites and hotlines that employees can call and make a complaint. I was the person that received all those complaints. However, there was a backup. If the complaint was about me, then it went to the board chair. So then number 14, do you have a written document retention and destruction policy? Here again, this is probably the policy that's the absolute hardest. It's easy to do the retention part. The destruction part is hard because making people get rid of their emails is going to be part of it. And that's difficult. But I strongly encourage you to do this, because if you're ever in a lawsuit and you have not destroyed those documents, they can be subpoenaed. And I've been in organizations where it happened, so. Okay, number 15, do you have a process for determining the compensation of the executive director? And so on Schedule O, you'll tell them what that process is. And do you do that for the key employees too? And then this last one, did your organization invest in a joint venture with a taxable entity? This is really key, and you need to be very mindful of this, because one of the things that the underlying legal things for not-for-profits is you can't have any private inurement, and that means none of the profits of your, or the assets of your organization can benefit any individual or taxable entity. Example, when I worked for a not-for-profit hospital, we had doctors who wanted to do a surgery center with us, so we set up a joint venture, but we had to be very careful that the profits of the joint venture were being allocated equitably to the hospital as the investor and the doctors as the operators. And sometimes the doctors don't love that too much. So just, my real advice is don't get in a joint venture. It's hard to make sure you're not jeopardizing your tax exempt status. Next. So then on pages 7 and 8, you will list all your board members, and you'll check whether they're individual board members, whether they're an officer, and whether or not they got paid anything. So skip to the next page, Becky. Then at the bottom of that, and so you will put your key employees on there, so your executive director will be on there. Then we talked about the 1099s before. This is the independent contractor section. So if you are issuing 1099s, you're going to have to tell them which 5 organizations or which 5 individuals received 1099s and how much you paid them. And then if you had more than 5 that made more than $100,000, then you would tell them how many that was on Schedule O. But Utah didn't have any because they're a small organization. They didn't pay anybody $100,000 or more. Next. All right, so here we start in the financial information. And The first section of the financial information has to do with contributions. Who gave you money? Why, and the money that you receive is important because they're going to ask you why you deserve to be a 501c3. And the main thing is that you're supported by outside people. So Arlene's asking the question, can the ED CEO be a contract employed 1099? Sure they can, absolutely. And then you would just list them on that 1099 schedule instead of as an employee. Absolutely, that's fine. Here, if your organization has memberships like San Antonio Museum of Art, you would put your membership dues there. If you had fundraising events, you'd put that money there. If you federated campaigns, if you were getting United Way or some other kind of money, it would go there. And then all other contributions go on line F. So usually line F is the largest line. You can see that there are columns B and C here. And so it's sort of, if they're from a related function, not this or not the main program function, or if they're unrelated business income, you would report that here. You would break out those line items into the appropriate categories. Okay, next. Then the rest of page 9 is detailed about your program service revenue and your investment income. So things that would be on here, investment income is going to be your, is going to be mostly interest earned. Sales of assets other than inventory, the two main things there, if your organization is fortunate enough to have an endowment of some kind and you buy or sell any stocks, this is where you would report your revenue from selling stocks. Also, this is where you give the details of your fundraising. And if you have a gift shop, like a museum or a hospital, then you would also report the sales of your revenue from that and the cost of the inventory that was sold here on this same page. Next. So this is, I will say, as a person filling out a Form 990, this is the hardest page to fill out for me. When we talked about the not-for-profit financials last week, you saw that the not-for-profit, the expenses were broken out into the columns B, C, and D, the expenses that relate to program service, the expenses that relate to management in general, and the expenses related to fundraising. So in many of these line items, you see that there are expenses in all of those categories, particularly line 5, which is your compensation of your officers and directors. Your executive director almost always has expenses related to the program. They have management in general, but they're also probably one of your key fundraisers. And so that person needs to do a little survey on their calendar and figure out a method for allocating their time between those 3 categories. Then the rest of all the salaries are there. So here's all the details they want to know about your salaries and then your various different benefit plans there. Okay, next. Then the rest of the line items on the expenses they made up their own categories, which I'll tell you are not the categories you're going to have on your financial statement. And that's the tricky part, is mapping your grouping of expenses into the groupings on the Form 990. Things they care about your outside service. They care if you've paid travel expenses for any public officials. And then occupancy, which is your your rent or your depreciation, your housekeeping, your utilities, and your depreciation. So it's all of your expenses. So next. And when you look at the page, the bottom of page 10, the Form 990, that's where you have the totals, where it gives you your total program expense, your total management in general, and your total fundraising. And those are the numbers that you're going to use to compute that fundraising or management efficiency, those trying to hit being better than that 80% goal. Now, it's tricky because you have different line items here than you do on your audited financials, but you need to make the numbers on this page tied to your audited financials, because you do send the IRS a copy of your audited financials, and places like Charity Navigator get them. So everything does have to tie. Next. Balance sheet is pretty simple. They want your balance broken out as your unrestricted, your temporarily restricted, and your permanent or restricted. If you weren't in the class last time, unrestricted are things that people gave you that you can spend on whatever you want. Temporarily restricted is when a donor gives you money to be spent for a specific purpose, like building a new building or hiring a specific teacher. And permanently restricted are monies that you receive where you cannot spend the money itself. You can only spend the earnings on the money. So that's things that would be in your endowment. Next. So they view the Form 990 as a way to kind of ferret out what's going on in your organization. And the big thing that they want to know, both on your assets and your liabilities, is do you have any loans either to an officer or an employee or from an officer or an employee? So I strongly encourage you not to have those loans in place. That's a real red flag and can often lead to conflicts of interest. So I would just encourage you not to do that. So if you're the board chair and the organization's in financial difficulty, don't lend them money. Help them figure out a way to get the money some other way. Next. I think we're going backwards. Okay, so once you have, once you fill out their form, then they're going to want you to say why it doesn't match the audited financial statements. And there are a few key areas. One is that the IRS does not want you to include unrealized gains or losses on investments as part of your revenue. And if you have an endowment, that's going to be part of your revenue there, is you have to mark all those assets to market. Excuse me. And so that's going to be one of your reconciling items on this. Also, if you had any investment expenses, like did you pay your investment advisor or anything, those are things that you may be handling different on your audited financial statement. So this is just what you fill out to make everything balance between your audit and your Form 990. And of course, on the famous Schedule O, you will just explain anything that needs to be explained. Here they want to know about your accounting system. They want to know if you do cash accounting or accrual accounting. They want to know who really did the financial statements. Were they compiled by an independent accountant or were they audited by an independent accountant? So you'll tell them that. And they also want to know if you have a board committee that looks at the audited financial statements. Did they get reviewed? Also, I don't know if any of you are large organizations, but there's something called a single audit. If you get more than $750,000 a year from the federal government, then you'll have to do this special audit called a single audit. But I would bet most of you don't have to do that. Next. So that's So that's all the sections of the main Form 990 document. Now we're going to start looking at some of the schedules. So the first schedule, and this is one that always existed, was where you tell them why you are what kind of tax exempt organization you are. And so here you can see under part 1 there, they want you to check the box about why you are a public charity. Why did you get this? And so the section 7 that's checked there is pretty much all the 501c3 organizations. But it is confusing because there's this whole other section of tax code called Section 170, and it's referring to that. And you just have to know that a 501c3 organization is this particular kind of Section 170 organization. But most of you will check this box. Then they also want to know where you got your money, and they want your money to come from the public. And so you go through a process of computing where all your money comes from, and they want you to have at least 1/3 of your revenue coming from the public. And that is predominantly donations. That's what they're looking at, is your money coming from donations. So they also are going to test for, to make sure it's not all one donor, that it's a broad spectrum of donors. All right, and so here, Schedule B is where you list your donors. And when Form 990 gets released, the Schedule B is usually not included for the sake of donor privacy. You have to submit it, but the IRS holds this more confidentially. So this is what I was saying, is that most people have to report under the general rule that if you've got $5,000 or more from any contributor, you have to list them. However, if you met that 33 1/3% support case, then you do the greater of the, let me get to your question in a sec, Alec. You do the greater of the $5,000 or 2% of the amount on the Form 990. So there's this complicated calculation that you do, that they guide you through, to say how much was your average donation from your top donors over the last 5 years. And you look at how much that was, and you compute 2% of that. And so San Antonio Museum of Art gets large contributions from quite a few different people. And so that 2% amount for SAMA turned out to be $115,000. So we only had to report donors who gave us more than $115,000. So it's kind of in the weeds there, but just that's why for bigger organizations, unless you're a really large donor for them, you're not going to get listed on the donor schedule anyway. So Ingrid Kronkowski probably is going to get listed, but when I give $100 to Girl Scouts, I'm not going to get listed.
Right.
Yeah, so next. And this is what you have to report on Schedule B. You have to tell them the name and address of the donor and how much money they gave you, and whether it's a person, whether they gave you non-cash, or whether they gave you contributed money for payroll, or yeah, anyway. Next. Oh, so back to Alec's question. Al, can we see that on chat again? Correct. I actually so Alec is asking if you got PPP money from the coronavirus relief from the federal government, and it was more than $750,000. Does that mean you have to do a special audit? No, I just asked our auditor that, and it is exempt. It's not considered a government grant. It's even when the loan is forgiven, you do not have to. It's not going to trigger doing a single audit. So I think that was Cressita's question too, and Let's see. And then Chris, are corporate donations and grants from foundations? Yes, absolutely. Any donation, not just individuals, but those corporate donations and foundations are considered public support. So Stephania, you asked about in-kind contributions. Maybe could you unmute yourself and clarify a little bit more about what kind of in-kind donation so you would report in-kind donations when you're listing that, with this one exception. You cannot report in-kind donations of time. Just like on the IRS, your own contribution form, you can't value your time and put it down as a deduction. You don't get to count donated time on your financials. Did that answer your question about in-kind donations?
Yes, yes. Mainly it was food from food
Right.
given to the food pantry.
Yes, exactly. Yeah. So I'm sure the food pantry has a way to value those groceries received. Sometimes, you have a gala and somebody will give you several cases of wine. So just make your best guess on the value of that. In-kind donations, as you know, it counts as revenue, but it also has the corresponding expense, so that has zero impact on your bottom line. But that both the revenue and the expense are important in reflecting the business of your company. Okay, did I answer all of the questions on chat? Anybody who would like more, just ring in and ask me what you'd like to ask. Okay. All right. So we're going to skip ahead to Schedule D. Schedule D is lots of supplemental financial statements. It will take you a while to complete all this too. If you have an endowment, all your information about your endowments is listed here. If you have any property, plant, and equipment, you have to give them details about the value and the accumulated depreciation of each of those things. If you use donor advised funds, anything like through the San Antonio Area Foundation, that would also have to be disclosed there. And so San Antonio Museum of Art, this was one of the biggest surprises to me when I started working there. This art is not considered an asset. When someone gives it to you, you don't record any revenue or expense or put it on your income statement. You just get it. So it has no impact at all on your financial statements. And of course, all of these supplemental financial statements have to reconcile with the many notes that are in your audited financial statements. I'm not going to spend much time on the other schedules F through O. They do want to know if you have activities outside the United States. They want to know the details of your fundraising expenses. So I hope you're keeping separate records for each fundraiser, so you know how much came in for each fundraiser and what you spent on each fundraiser. They want more detail on your compensation for your top paid individuals. And then they do want detail on any non-cash contributions. So you were asking about food at the food bank. Yes, they want you to tell all those kinds of things that you get. And then your Schedule O, as I mentioned, is all your supplemental information where you give them all the explanations. So that's the whole Form 990. If you have any, I know it was pretty technical and I know that was pretty fast for such a large document, but I will offer to all of you that if you have any questions or want more information, please feel free to reach out to me, send me an email or a text, and I'm happy to get back with you.